Hey, here we are. All right, y'all. What's up? Welcome back to Talk It Out with D&D. And guess what? Tonight is going to be a little bit different because we're going to turn this session into a Q&A, okay? And this is going to be concerning, it's just for you concerning our tax season because we have an awesome tax expert in the house in the form of Miss Denise Murray over here. And she is going to give us some tips and updates and oh my God, a lot of things that have occurred, honey, after this big, beautiful tax bill. Well, we can't call it beautiful, but anyway, we're going to be talking about a lot of things tonight because tax season is right around the corner. And y'all forgive me, I'm glancing up and down because we got a lot of good notes for y'all. We're gonna stay on track today. And a lot of people are confused, they're nervous, and they're already stressed about this upcoming tax season. I know I was worried last year, but I'm really glad this year that I have an upcoming. So we're going to get ready for that. And the reason that we're doing this so that you all and everybody, family members, all of us business owners, as well as civilian families without business, so we can get some clarity, right? We're not going to use any tax jargon. We're not going to scare anybody. This is not about scare tactics. This is just about getting real answers so you can be prepared and not leave money on the table, okay? And that's what we need to do. A lot of times people don't understand, and that's where the fear comes in. But we're going to kill all that today, all right? So if you're watching right now, and whether even if you catch this in the replay, I want you to go grab your notebooks, grab your last pay stub if you have it, and let's get into it, okay? So that's what we're going to do. But without delay, honey, I'm going to introduce you guys to Queen Murray over here so she can tell you guys a little bit about who she is and what she does before we jump. We're going straight into question number one. So take it away, Queen.
Hey. Hello, everyone. Happy New Year to y'all all. I hope y'all having a fabulous day so far. And y'all New Year is just going in a twist for y'all. So come on in and we are going to give it to y'all because we want to make sure that y'all are ready for this tax season. We don't want y'all to miss out on any credits, no deductions. We want y'all to be understanding what is going on this tax season. So that is why we're doing this special for y'all tonight so y'all can be on point and ready. So again, if you are on here, go ahead, take time out right now and share this with anyone that you know. As a matter of fact, what I'm going to do is I'm going to go ahead and put a little bit of a pause on this for a moment, just so everybody can get a chance to go ahead and share it out. So I'm going to put a 30-second pause on this just for a second. All right, y'all. I hope y'all shared it out there. Shared it out. Now, Miss Day is going to go ahead and take it away and ask me these questions so we can get y'all going. So let's go, y'all.
Yes. All right. So what I want to, my first question is, this is a good one. Okay, there's been a lot of talk about the big, beautiful bill, right? And how does it affect people who earn tips and overtime?
Okay,
so a lot of people were confused. So help us with that.
Now, this is a big one because for people who work overtime and get tips and things, this bill is actually helping them. It's actually doing them a favor because on certain overtime and certain tip income, they're going to be treated differently this tax season because now they're reducing the taxable income in these situations. So that means that some people may get higher refunds. So if you get tips or if you get if you had overtime, you may actually get a higher refund this year than what you normally would have got because all of that money is not being taxed as if it was before. So that's why I tell people, hold on to your last pay stub to make sure that your tips and your overtime is being
Mm-hmm.
put on your stubs correctly, because there could be some credits and you don't want to miss out. You want to make sure that you check in your pay stub, your last pay stub, making sure that all your overtime is on there calculated right, that if you had any tips and things, that they're in the right section, so those things can be on there properly to make sure that you get the proper credits that you deserve when it comes to this tax season. Because I'm telling you, you might be smiling when you get that refund and you looking at it, and it's more, because normally, honestly, when they used to come to people getting overtime, you get taxed so much, and you get higher taxes when you have overtime. So a lot of times people was getting hurt because now they're making so much more money, and then they getting taxed more, so then they end up owing money at the end. This time, guess what? They may actually get higher refunds.
How they say? Oh, I love that. I love that for us. Okay. And for those of us that did not know, now you are in the know. And that's the beautiful part about this Q&A session that Niecy decided to do tonight, because we don't know what we don't know.
Right.
So that's the goodness. That's the beautiful part about this. Okay. So I'm excited. Okay. Question number 2, business write-offs. Now, some of us know a little bit about business write-offs, and some of us have no idea. So give us the background, give us the 411 on what you can deduct.
Okay. So in your business, there is a lot of things that you can deduct in your business, but just make sure it makes sense for your business. Because sometimes I saw a post the other day where a guy was actually an Uber driver, and he had on their mortgage. He had on there he was wondering why he was getting audited, but he had all these expenses that didn't gear to anything that an Uber driver is supposed to have. So make sure that when you're looking at these deductions, that you're speaking to your tax professional, because if you're an Uber driver, 9 times out of 10, you're not doing no advertising. 9 times out of 10, you don't have any officers. You don't have certain expenses that a person who's running, let's just say, a consulting business, or say a travel business, or say even a trucking business. So those expenses, all these types of different businesses are going to have different type of expenses that are geared towards your business. So let's just say common expenses that a lot of businesses may have is you may have salaries and wages. You may have officer compensation. Now, officer compensation is meaning you're doing payroll for yourself as the business owner of that business. So you're paying yourself in that business. So that would be that officer compensation. And so now that is on there. You also have your repairs and maintenance. Let's just say that you had to get some work done in your office. That's repairs and maintenance that you could put on there as well. Say you have office space, whether it's virtual office or brick and mortar, that can be rent expense that you have for your business. Advertising and marketing. And let me tell y'all about this advertising and marketing, because some of y'all miss out on this. You have business cards, advertising and marketing expense. Check.
Yes.
You also, some of y'all are putting ads on social media like Facebook, Instagram, TikTok, and y'all paying for those ads. Guess what? Advertising and marketing. Check. Some of y'all are doing flyers for your business. Guess what? Advertising and marketing. Check. Some of y'all put y'all signs on y'all cars. Guess what? Advertising and marketing. Check. And so these are things. You have a website. You put in things on Google. All of these things that you're doing to market your business. Guess what? Advertising and marketing. Check. Insurance premiums. Now, insurance premiums are not healthcare. That is not healthcare when you're doing your write-off. Please understand it, because I don't want people to think, oh, I paid my insurance for my health, and I'm thinking that insurance is something that is not an insurance that will go for your business. The insurance premiums are for businesses. Let's just say you have like that general liability insurance, that workers' comp insurance. Those are the type of insurances that you're writing off when it comes to your business. You also have payroll taxes. You have payroll services. If you pay somebody to do your payroll, then that is also services that you can write off as well for those services, as well as those payroll taxes. Because guess what? When you're doing payroll taxes, and I'm going to jump into that later because I want to get a little bit more deeper into that. But those taxes, that's also things that you can write off. You also have education related to your business, y'all. How many of y'all have been on here and y'all see these different people posting and y'all like come into this webinar and y'all paying those fees to get into these classes and get into these webinars, get on these schools and all this kind of stuff? Guess what? Business, that is also a write-off. You're going to these business events. Those is educational events. That is also a write-off. You also have those office expenses and supplies. So I'm talking about your paper, your pens. You know, you got to get the printer paper. You got to get paper clips and all these little things that you need for your office. Those expenses like that, those are write-off. Guess what? Bank charges. You have a business bank account, and some of y'all may actually pay a fee every single month to keep that business bank account going. So guess
you
what?
can write that off. I didn't know that.
Charge that you can write off, because that bank fee is an expense that you can write off, them bank charges. So, you know, like, I don't know about y'all, but I know like Wells Fargo, they would charge like that $10. So like some of those banks, like when you have those, they say you have to have $2,500 in your account. If you don't have that, or if you don't have, some of them may say, if you don't have that in your account at all times, then you'll get charged a monthly fee. Or if you don't have like deposits going into the account, then they'll also charge you a monthly fee. So those monthly fees, guess what? Bank charges, you can write those off. Girl. Also, you have those legal and professional fees. If you had to consult with anybody for your business, like a business consultant, or if you had to get a lawyer, or any kind of professional stuff that you had to take care of with your business, you had to get notarized paperwork or things like that. Those are also things that you can write off in your legal and professional fees. Travel expenses. Now, these expenses is a lot that you can do, but it also, I always say this, point, boop, 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 boop. These travel expenses are for your business related expenses. However, when you own a travel business, guess what? You can write off a little bit more than your average business. Now, when I'm talking about the write-offs for the travel, you depend on what type of business you have and those travel expenses. Guess what? When you go to the airport, you know how you want to get, they tell you got to pay for that seat. If you want to, now they make you pick a seat. If you want to pick a seat, you got to pay for that seat. If you want to all that, you also got to pay for your bags and all that kind of stuff. Guess what? Those are travel expenses that you can write off, because you're paying for that for you to travel with your business stuff. You also have your auto and truck expenses that you can write off. So I'm talking about you getting your parking, your tolls, your gas, the oil changes, your maintenance. If you had to get your car fixed, guess what? Your car washes. Those are all things that you can put with your vehicle if you're claiming your vehicle on there as well. Not only that, let's just say we going out to eat for lunch and we talking about business. We doing a business lunch. Guess what? The meal is also a write-off. Licenses, permits, and guess what, y'all? Subscriptions. How many of y'all are paying for these subscriptions on these daggone things right here? We have all these different apps that we sometimes be paying $2.99, $3.99, $7.99, all that type of stuff on your phone that you're using for business. Guess what? Those subscriptions all can be put as write-offs. Now, we're not just going to stop there, because you also, with your vehicle, you do get that loan, that lease and loan interest as well for your vehicle. And then we're going to jump over to the thing that a lot of people miss, and that is depreciable expenses, things that you can depreciate over time. So like, say for instance, like I was just talking about that car, you can put your car on your taxes and write that off for 5 years. So that is 5 years for your vehicle. You have these computers and office equipment, like you get your new desks, you get some cabinets, all the big things that you purchase in your office space, your furniture and things. The computer and office equipment is 5 years. Furniture, your chairs, your computer chair, like I'm sitting in right now, these type of things, that's 7 years that you can write that off. Residential rentals, you actually get 27.5 years for residential rentals. Commercial property, 39 years for depreciation. So y'all hold on to this list now, because I done gave y'all a whole lot. So y'all put that down and y'all go ahead. And also the final thing I'm going to tell y'all is land improvements. So let's just say where your business is and you had to improve that area where your land is, you can actually get 15 years of depreciation for that as well. So all of those things are depreciable items that is not just for that year that you're doing your taxes in, but that can be for current and years going on, depending on what it may be. I hope y'all got
wow. Okay, hold on. We just gonna drop the mic again. And then I checked a couple of boxes. So let me ask a couple of questions before we move to section 3. Okay. Section 2 is just hot as fish grease. Okay. So in this particular area, I know put a note that you're going to come back to the payroll taxes a little later. You're going to cover that a little later. But in the area where it said repairs and maintenance, if your business is not a brick and mortar, but you have a legitimate home-based business, so does that consist of anything that's happening within the home, or does it just have to be within the office?
In the office, not the actual home. So let's just say, like right now, where I'm sitting right now, this is my office space. And let's just say I had to get new carpet in this room for my office space. I had to repair it. I had to get new carpet. I had to get my walls painted. All of the things that I have to do in this space alone is what I can have. And I missed one expense, y'all. Utility. I did not say utilities. Now, utilities, if you have your home-based business, you can only get a portion of it because most utilities are going to be for the entire property. So you only get a portion of that for what is actually catering towards your office space. So of course, most office spaces, you're not going to have water in your office space. So that's not something you're going to put on there. But electric is going to be using for your whole entire home. But that is going to be an indirect expense because you can use that expense for your utility to write off inside your office space. Now, me, I can go 100% with my desk phone because I have a phone with my printer, but it is specifically in this office. It's not for my entire house. So I can do 100% of this phone bill that I pay for this phone in this office space. Now, if it was like including the entire house, then I would have to do a portion of it. Also, internet. I need internet for my office. However, it's for the entire house. So again, that's going to be an indirect expense for the internet and for your Wi-Fi. And let's just say if you're using cable, of course, those are things that are going to be indirect expenses and not direct expense. Direct expenses are only for the things that is specifically that you pay for in that office alone by itself. Anything else is going to be an indirect expense, and that is not something that you can get the full amount for.
Okay, so in that case, because we do have the internet that's running through our homes, so is it a percentage? Is it a third?
It will be like a percentage of that expense.
Got it. Direct expense for the business. Okay, all right, that makes a lot of sense. And
don't forget about these, because we didn't say this. We didn't say the phone.
Oh, we got to say the phone.
This is also depreciable too. Because we're paying $1,200, some people paying even more for these phones right here. And this is something else that you can not only write off the bill. And what I would suggest for y'all to do is not keep your cell phone as a personal phone. Put your cell phone as a business line, so then you can 100% write this off.
Oh, I may do that. I need to do that.
That's why I changed my phone. When I did my phone, I changed my phone to make it a business number. And it's set up as a business account. So I can literally write this completely off 100% and not just do a portion because I'm not as a business. So don't forget that.
Okay. All righty. I'm telling you, I'm loving this. Okay. So that was good information. Okay, so we got that covered about the office. The utilities are a partial. Same thing with the internet, a partial. But you know what I learned last year? Let me throw this in. That I knew that my office space, my other office space was set up. Girl, I got to ask you about the glam room because I'd be working out of this room too. But anyway, the office space that had that I had set up within the space. I was hearing someone talk about this because if you're working out of your home, you know how they do the square footage. The square footage, that's so much square footage you get. But then I heard this person say that also if your restroom is not within your office, you still get to claim that space because I still would have to walk down my hallway to go to my second bathroom, which is nearest to my office. But is it true that that space should be counted as well?
You
Because
can
I have to
include
know
that.
some
You
of
can
these
include some of. You can include that in your square footage.
in
So
the
like
square
that
footage.
is in the square footage. So when you're doing like you can be maybe it'd be like 1280 by whatever your your room
Square
is or
footage.
whatever. You can
Mhm.
put a little bit of that in, but again, that's not going to be the full because it's technically still is inside your home and it's not
Right.
technically within the office, but you can do a little bit part of that square footage.
Okay, because that had come up, so I'm gonna think about I'm gonna adjust that for this year. Okay, the other one was you coming back to taxes. I had no idea about the bank charges because I was getting fed up about bank charges when I
Yes,
didn't have so much going into my business account, but yet y'all charging me $12.50 to do what? Y'all lending out my money.
the
But
money
anyway,
roughly. And then don't forget, not just those fees, but also what also is claimed as bank fees is, let's just say you had to go get a money order or a certified check or anything like that. Those things for those money grams, all that kind of stuff that you have to do for business, that's also things that you can write off. Even and another thing I missed out on was shipping. So let's just say you had to send out something through UPS, postal service or whatever, those shipping fees is also included as well.
wow, that's good to know because I'm telling you, I was fed up with B of A anyway, and then they didn't wasn't gonna they wanted to charge me for a doggone money order, and I was like,
Right.
"Are you
So
serious?"
I tell people always try to find banks that don't charge you a monthly fee that has the free business checking. So you don't have to worry about that. But if they do charge you, because some of them what they'll do is they'll say you have to have a certain amount in your bank account for the
Yeah.
business in order for you not to have that monthly fee. So just try to see what gives you that benefit. And also if you're starting out and you don't have a business bank account yet, make sure you check for a business bank account that actually gives you money when you start open up their account. So say for instance you open up the account, then they sometimes will give you a credit of say you'll get like $300 for opening up your business bank account. So now you're putting some money back into your pocket as well because sometimes you got to put a deposit in there. So now you getting money back off of you starting your own business.
Absolutely. And I know me and Dr. Felicia, we talked about that. So I'm going to get that info because she gave me the name of a bank that they give you perks back. They'll give you cash back and you're feeding into your own account.
Into your
That's
own business.
what I want. Okay. Okay. All right. I'm going to get us moving along. Let's see. Oh, and the other good one, because I was doing the legal, even with my legal shield, I always write out those legal fees. But with the travel, I never thought about them $35 bag
Yes,
fees.
some bags you write that
$12 per seat.
chairs, some seats. When you want to upgrade your seat, you can write that stuff off with your travel if you're doing business travel. So, like when people taking trips and you have a business, make sure you put in your make sure you saying this is you're going on a business trip. You're going on business mindset coaching or something. You want to have you want to make sure that you're doing something business related when you go and doing your travel. So now you can have that expense that you can be doing that you can write off. So you're not just going to go on vacation. When
No.
let's just say you actually put a family reunion together. And this is what I tell our travel business owners about. Because if you're going on, you putting a family cruise together, not only can if you own a travel business, can you go ahead and get the money for getting that commission from booking that trip. But guess what? Now everybody got them t-shirts on right off. You're advertising your business. So everything you're doing now, guess what? Right
Right
off.
on. Oh, I love that. I love it a lot. And that's the point. Honey, work is smarter, not hard.
And you then not only are you being able to get money back from your taxes with being a travel business owner, but guess what? You also are making money because now you're getting commission on the trip that you booked. So now you're getting a double whammy. So you're getting money through the year and at the end of the year for one business. So that's
Oh,
why I
I
tell you, y'all
love
better not
it.
sleep on them travel business.
Don't sleep on it because I'm coming. I'm coming. And on the areas where it had with the car expense on the auto and truck expenses, I thought this one was so cute because my husband, he was a former car GM. He don't play by no dirty cars, right? And
Right,
he has that wild package where you could wash your car as many times the month for like $39.
right.
It's a write-off because we don't roll up to business meetings in dirty cars.
Exactly. Write it off.
Oh my God. Okay, I can't wait to tell them that. Okay. So in the last one, no, we added in the shipping fees and to not sleep on your subscriptions, the licensing and the permits.
Mm-hmm. Now that was all for businesses because I don't want people to think that we sleeping on the people that don't have a business. So there are expenses that people have who don't have businesses. So they do have credits that they can get, the common credits where they have the childcare expenses. They also have those education expenses. So if you got that, if you're going to school, you have that 1098T for the tuition. You also have that student loan interest, that 1098E that you would get for your student loan interest. You also have those books and required supplies that you have. You also have that room and board. You know what I mean? So, and you saying that you had and any bills that you had to pay directly to the schools. So, all of those things are things that you can have without having a business, and those are other expense. Those are other credits that you can get on your taxes as well. So, I didn't want to leave out the people who don't have a business because those right there are things that you can get. Now, those now because of the new tax laws and because they are more so geared towards business owners. However, those are the only things that you can honestly get without having a business. So that's why we always say, get you that side hustle or that business because those are the only things that you can get off.
Okay, okay. And just let me check this real quick because on my sheet here, I know we were talking about and you talked about the vehicle depreciation for the Schedule C. Did we talk about the total miles?
No, now each year, like changes can happen when it comes to how much mileage that you can actually write off for your taxes. Now, for 2025, the mileage rate is going to be 70 cents per mile.
70
That's for
cents?
business use.
Okay.
Now, if you are, 70 cents per mile. Now, if it's going to be for medical purposes, like if there's some type of medical that you have going on and you're doing some medical expenses on your taxes, that's only 21 cents per mile.
Okay.
Now, if you were qualified active duty member, like say you in the armed services at any branch of the service, you get 21 cents per mile as well. And then if it's for charity organizations, it's 14 cents per mile.
Oh, okay. I didn't know all of them even had their own category.
Yes. Now, for only thing is I tell people a lot of times when it comes to medical, it's not, you really don't get a lot when it comes to medical. Medical is one of those things that you really have to have. It pretty much almost got to be close to your salary for you to really see any touch on that, when it comes to medical expenses. So that's why a lot of times people don't really claim it because you really don't see anything at the end of the year when it comes to medical because it's almost it's like a percentage when it comes to your income. And so that's why a lot of times you may not see a lot of people really putting in the medical. But for those other expenses, you definitely can have those. But like I said, depending on what it is, like I know sometimes some people may have maybe a cancer patient and they have a whole lot of expenses that are not being paid through their insurance and they're paying a lot of things on their own. So those are all things that they may want to write off and have those medical expenses, the medical miles and all that things that have to do with that because there's taking a lot of their money.
Okay, okay. Now, so here we are right here, right now on question 2B. And you did not forget about the other half of our families that don't have businesses because this section in 2B is talking about tax credits without a business.
Right. And that's the ones that I just was telling them about, the childcare, the education, and those are the only things that they can get now is pretty much the education and childcare. That's really it when you don't have a business. Other than
and the tuitions, you just mentioned the tuition.
Depend on where you at, and I'm gonna go deep. We're gonna talk about that later, but I'm gonna tell y'all some little pointers when it comes to that because again, taxes now are for business owners. They're not really for people who have a job. So when it comes to people who have a job, honestly, that's the only two things that you're gonna get credits for.
Okay, because you said books and required supplies, room and board, scholarships,
Right.
bills paid directly to the schools. Okay.
Mm-hmm.
All right. So we'll revisit that one, the one that you said you're going to come back to.
Mm-hmm.
Okay, but now in section 3, we're talking about the write-off warnings.
Mm-hmm.
What
Now,
are some of the warnings that okay, what do people need to be careful about with the write-offs?
Now, with the write-offs, I always like to tell people, do not over write off just to get a refund. I know sometimes people get, they're like, they going to owe, and pretty much you got to be pretty much making nothing when you don't have any children. And so people be like, okay, well, I'm going to write this off. I'm going to write that off. I'm going to write this off. And like I tell people, you want to be careful with that because the deductions must match your profession. Like I was just talking about earlier about the Uber driver. Like you cannot be an Uber driver and a Lyft driver and all those expenses that I just listed. Half of those expenses is not going to cater towards you because all you're doing is using your vehicle and driving. So you're going to mainly have driving expenses. So when I was talking about mileage and I'm talking about the car stuff, like your car washes, your maintenance on your vehicle, all of those types of things are things that you would have as a Uber or a Lyft driver. You're not going to be writing off rent expenses for a property. You're not going to be writing off office expenses. You're not going to be writing off things that has nothing to do with you being an Uber driver. So you want to make sure that your deductions is actually matching your profession. Also, you want to make sure that as a business owner, make sure you keep and have a business bank account. And like I said, check out for those accounts that give you money back. Make sure you have that business bank account. And the reason why I push for people to have that business bank account is because at the end of the year, a lot of people always be like, oh my God, I dread this because I don't know what to put, what I did with all these receipts. I'm trying to figure out all the stuff I paid. How much should I spend on this? How much should I spend on that? But guess what? You can turn your bank statement, if you're using your one bank account for all your stuff, all your income and all your expenses, you can turn that bank statement into a profit and loss. Now, there's also an app out there that you can use too when it comes to receipts, where you can put them in a system, take a picture of it, and it will, matter of fact, let me give y'all the name because that company there is really good for whoever, let me see if I have it here for y'all, because that company that you use, when you put those expenses on there, you take the picture and put those expenses down, and it will even break down your stuff into a profit and loss for you, and you don't even have to do it. So all you have to do is snap the pictures of all your receipts, and it will put everything in order. It will categorize everything for you and everything just for a snap of a picture. It is called, hold on, what is the name of that company? It's an app that you can put on your phone.
So this will help with the profit and loss statement.
This will help, like if you don't have, like say you're not taking care, if say you forgot, you got into business and you didn't have say a business bank account, and you were like, oh shucks, I don't have no business bank account and I have all these receipts sitting here, and so you're trying to figure out what to do with all of these receipts and all this kind of stuff. It's called SimplyWise USA.
Say that again. Kind of broke a minute.
SimplyWise USA. SimplyWise USA. SimplyWise USA. All you have to do is snap the picture of your receipt. It will put everything in order for you. And at the end of the year, it will give you a whole printout where you can just put an upload and send it straight. And it will actually be able to be sent straight to your accountant or your tax preparer. And then you don't even have to worry about trying to figure out how much you spent on a phone, how much you spent on travel, how much this is going to automatically do all of that for you right in that app on your phone.
Wow.
So make sure you keep that. And like I said, if you go back to my previous live that I did, I showed y'all how to put a profit and loss statement together from your bank statement. But those are things, like I said, that you want to be careful of, because if you overwrite off things that don't has nothing to do with anything you got going on, you're going to get audited. The other thing is, if you are someone who's trying to get a loan, if you're somebody who's trying to purchase a vehicle, or if you're someone who's trying to purchase a home, be careful when you're doing too much writing off, because guess what? Your adjusted gross income is going down as much as you're writing off income. So let's just say you made $50,000, but you was going to owe, say, $15,000 because you didn't have no taxes being paid all year. So now at the end of the year, as a business owner without expenses, you normally owing all that money at the end. And so what you do is what most people do, they'll go in and write off all the stuff on the Schedule C. However, when you're doing that, you went from 50,000 as your adjusted gross income to now say 10,000. So now when the bank or the credit union or whoever are looking to give you a car, give you a house, or give you a loan, they're looking at your income as, oh, you only got $10,000. So now guess what? They're like, you didn't get enough money, so now you don't qualify. So you want to be careful of writing off too much when it comes to doing your taxes, because then it's going to make it look like you didn't make no money. So be very careful when it comes to writing off too much income, writing off too much of your expenses. You want to be careful with that, because like I said, if you are somebody trying to do something, you don't want that to be a situation. And not only that, if your income, now you still have, let's just say you got to that 10,000. Now, if you start getting it all the way down where you're going into a negative, the IRS after 3 years, they're going to say, okay, you're not making no money. If you keep having a negative every year, they're going to say this is a hobby. This is not even a business. So they'll deem your business as a hobby, and then you will no longer be able to write it off.
Oh my God. Well, I know this is good information, and let me be a testimony to the fact that having a awesome tax accountant that can share this information with you is critical, because I know last year we talked about this and you explained that to me about, because in my first year in business, it was write it off, my equipment, everything. But the next year when things were slowing and I wasn't making that much money, then I'm still thinking, well, why I'm not getting my refund? Why I can't do that? And then to look at that closely, to hear you explain it to me, how you don't want to do that because you could throw yourself in reverse.
Right.
So I think it's critical to have somebody that knows the tax laws that can explain to you how it can benefit you and how you can turn around and hurt yourself. Exactly. So I appreciate that. And I know before we get out of here, we're going to tell the people how they can find you, honey, because they need to be blessed as well, because I know I'm excited. Okay, so now this next section, you covered that one well. And I like that information. Simply Wise USA, in order to get that app so that can start collecting our profit and loss statements.
Right. And what I'll do is when we finish, just put that in the note in the comments on this, like when we put the live on here, when we put it on YouTube, I'll put that in there so then people can actually go on there and be able to get that site, because I actually helped somebody with that the other day. And when I tested it out, I was like, oh, this is awesome how it put everything right in order and then even gave me a spreadsheet.
I think that's beautiful, because like you say, doing that whole, when they were trying to give people the PP loans and legitimate businesses, but they didn't even know how to put together a profit and loss.
Exactly.
So that's some good basic information. I love that, sis. Okay, so now we're moving on to question 4. We're going to get this one in here now. This text question 4 is talking about the big box tax prep companies versus the software. So how do big companies and tax softwares charge?
Now, most big companies like your H&R Blocks, your Jackson Hewitts and stuff like that, they're going to charge you per form. So let's just say you have a child tax credit, that's a charge. You have an earned income credit form, that's a charge. You got childcare, that's a charge. And so a lot of times when people go to people to get their taxes done, they don't understand that, and they be assuming. But see, a lot of times how they get over is because when you go to big companies, and some small companies can do it too, because like if you have tax software, if you're a tax professional, you can offer your clients that where you can do like the loan on your taxes. So some people may go and try to get their taxes done early and get a loan on their expected refund. And so sometimes what happens is they're in a rush to get their taxes done and in a rush to get money real fast. And so what they'll do is they don't know how much, they don't really pay attention to the amount that they're being charged. And so sometimes some people will end up paying hundreds of dollars for their taxes, and they didn't realize how much they were paying because they would just focus on, I got $6,000. So the fact that I got $7,000 or something like that. So they're not looking at the fact that they might have just paid $700 to $800 for that tax return, because
And
the
not
older
even
people
care.
don't even
Right.
realize it, but some of them don't care because they just worrying about the money that they're going to get. Because some people actually live for a tax return, but they got to be careful because that's day is going soon. Might not always be like that, but you got to be real careful. Now, also you have the home tax softwares as well, like your TurboTax and free tax softwares and things like that. And the only thing I say is with those free tax softwares, a lot of times they don't give you all the credits, and that sometimes can hurt you. Because I remember I was talking to my brother one day when he was doing the tax, and he was like, "Oh, I went on this free one," and he was like, "I end up getting less money on here than I did on this on Turbo." And it's because sometimes the free taxware don't give you all those certain credits that you're supposed to get. You can
Mhm.
get, and that's why I say be careful of the ones that say free, but none of them are actually all free. Even Free Tax USA ain't free because you still got to pay for the state. So some of them may say is a cheaper amount to get it done, but be careful when you say cheap, because again, it may come up where you may not get certain credits and refunds and things. So you may shorten yourself on getting money at the end of the year.
Yeah, and I totally agree with that as well, because I used to be a turbo girl before I did H&R Block, and
Mm-hmm.
then now you and I are connected. But I had never once had somebody be able to explain specific things. It's like,
Mm-hmm.
okay, you'll run it back if you're doing turbo, run it through, we'll let you know. Okay, but you
Mm-hmm.
don't know what you don't know.
Right.
And then with H&R Block, I had a good agent for a while. Then he retired, and then another one was just bring me this, and that's what I'm going to do. But that's where I was going to next, because in that section, I remember that first year of my business, and I was doing the write-offs, and I was sharing this with a young lady, and she just went nuts. And she was like, her tax lady never told her about this, or this. And
Mm-hmm.
then I started thinking, but that's your responsibility to know as well. But
Mm-hmm.
if that person is not sharing the information with you,
Right.
that's a sad situation too. Because so my question would be, what should a person, a regular civilian filing their taxes, or even a business owner, what are the basic documents that they should bring to that tax preparer? Does that question make sense? Because
Yes. So basically, you saying like what type of form? So I know
information
here
should be
on
bringing to you. Yeah.
normally when it comes to taxes, and this is one of the things that I am a stickler for. I am not a person who wants people to rush and get their taxes done. The reason why is because every company has until January 31st to send out tax forms. So tax forms can take 7 to 10 days to get to you from that date, since they have to be postmarked at January 31st. So what I always tell people, anytime there's an income form, you want to make sure that all income forms are given to your tax preparer. Because anytime you don't have an income form that's not given to your tax preparer, what's going to happen is you'll get your taxes done, and then you'll end up owing money later on, and then you looking crazy because you're like, why I owe money? And then it's because you didn't add in all that stuff. Now, there's some things that may not come to you in the mail. And this is one thing that is so imperative, and I want everybody to listen to me on this one. When it comes to 401k, when it comes to stocks and things like that, when it comes to HSA, all of those types of things, go ahead and go to those websites, because a lot of times you don't realize it, but you opt in when you sign up with your companies, these jobs that you may have. A lot of times you're signing up to get that online. So they're not sending you anything. You're actually having to go to those websites and get that information, those tax forms from those different sites, because they don't send those out to you in the mail. And sometimes that is the thing that will make somebody's taxes change for them. So like say for instance, you had, I don't know, let's just say your company was stocked with, I'm just gonna make this up, Walmart. And let's just say you happen to take out money, or say you had a 401k and you took out money and you didn't have that form come into you, and you didn't go on there to pick up that form on the website. You did your tax, everything is done, you got a refund, right?
Mm-hmm.
Now a couple months down the line you get a letter saying you owe, say, $2,500. And it's because guess what, the IRS, once that income comes in, they automatically input in that information a lot of times on your taxes. They don't ask for no expenses or none of that. If his income coming in, they add in that income on, and whatever the balance is, you owe it. So
Yeah.
that's why I tell people, be very careful when before you getting your taxes done. Do not rush. Make sure that you have all the tax forms, especially when they're income forms. It's not, I mean, those income forms are so important because those are the things that's going to make or break you.
I love it. So that is critical. Wait on your income forms,
Right.
because if you do not, you're going to be in the middle of the road talking
Right.
about, I got to do an amendment. Okay.
Exactly. Now, IRS doesn't open up this year until January 27th to start doing taxes. So you can't file anything until January 27th of this for
Oh,
this year.
okay.
However, if you
Seven.
are somebody who just, let's just say you just had one job, right? And you didn't work nowhere else and everything you have is online. Now, somebody like you who has nothing else, that person can go ahead, pull their stuff offline and go ahead and get their taxes prepared. And then when it's time to when the IRS open up, boom, they can go ahead and, get it pushed through. But if you're
Ah,
not the type of person and you have other things going on, you had health savings account, you might have had a 401, you have all these, you might have worked multiple jobs, or you might have had social security or pension or all these other things. You need to wait for those forms to come in because you don't want to mess up and not have those forms.
okay. All right. So I'll be patient and wait for my government forms. Okay. All right.
Let me Colette Brooks is over here tripping, talking about how much money can she get back for having me.
For having you.
Now I'm gonna go ahead and ask the next question for File so I can answer this just for her.
Okay. All right. Question number 5, hot off the presses. Here we go. The child tax credit age. What is the age limit for the child tax credit for 2025?
It is 17 and under at the end of the year. You cannot claim your child if they are not 17 or under. Now, if they're in college, you can claim them up to age 24. But if they're not in college, you only can get to claim them up to 17 years of age, and it has to be 17 at the end of that tax year. But like I said, if they went to college, then you can claim them up to age 24.
All right. So does that answer Queen Colette's question?
It should, because she can't claim your 46-year-old daughter.
Okay. Okay. So we're moving on to the other half of this question. This is a two-parter, because question 6 talks about the earned income credit, that EIC for 2025. And I'm asking, what are the income limits and max credits?
So the maximum amount for earned income credits that you can possibly get, if you have 3 children, is $8,046. The maximum credit for 2 children is $7,152. For 1 child is $4,328. And if you have no children, the maximum amount is $649.
You could get an earned income credit with no kids?
Mm-hmm. Depending on your income. You didn't know that?
No, I did not.
Oh, yeah. You can have an income credit without having children. It just goes off of your income. So you can still be able to get earned income without having children.
So even a senior citizen.
So that's something, because some people actually, when it comes to the earned income credit, you actually have some people have children, and sometimes they actually get more money on their earned income than they would. They sometimes don't get that much for their child. So say, for instance, your income limits, let's just say your income limits is, you're single, you had a household, or either you're a widower, right? And let's just say that you had, say, 3 children, right? The maximum amount of income that you can make for those 3 children in order for you to get earned income credit is $61,555. Now, if you were married, filing joint with your husband, is $68,675. Then that's for people with 3 children.
Mm-hmm.
Then if you have 2, the maximum amount that you can make is $57,310. And if you marry, filing joint, is $64,430. Now for the single, and like I said, this is still again now, if you just have 1 child, the maximum amount that you can make for you to get that earned income credit is $50,434. And if you're married, filing joint, $57,554. Now, if you have no children at all, and it's just you, and you're filing single, is $19,104. And so that's why I tell people, when you have earned income credit, sometimes you will get that earned income credit and you may not have a child tax credit. And then some people, you see how I said 19,000. A lot of people are not making $19,000 for the whole year. So a lot of times they end up not getting that earned income credit because of the fact that their income may be over that amount. And a lot of people are a lot of times it's going to be over that $19,104 for the year. And that's for people who don't have any children. So those people, a lot of times, wind up not getting the earned income credit because their income is not going to be that low. You see what I'm saying? But what I always like to tell people is, when people are married, a lot of times they sleep on not filing joint because they're like, oh, my husband has a business, or my wife has a business, or this person owe all this kind of money and blah, blah, blah. But guess what? You notice when I gave you those figures that married filing joint amount is always a little higher than if you were single or had a household or a widower. So you're getting those married filing joint credits. And so when you're married filing joint on your return, it helps you get more credits. Now, if you're a person, let's just say your husband has some back child support, or he owes some stuff, or he has some student loans out there and they go and take his money from him, then what you would do is you would file an injured spouse form. You still file married filing joint, but you do an injured spouse form. So the injured spouse form covers you, so you're not responsible, and they can't take their full amount of money. They'll just take a portion that his part is for his part that he owed, and not the portion that you're supposed to get back. So you will file that. But the key to that is, when you do an injured spouse form, you have to file that form every single year when you're doing your taxes. That's not something you do one time. Every single year you file, you would have to do that. And then when you're doing that, you have to make sure that those debts didn't come in when y'all were married. It had to have been before you came in the picture. And so that's a better option to always go when it comes to married filing joint, is doing that injured spouse form, opposed to just saying, I'm just not going to claim with him. Because when you do married filing separate, it kills you. And then you don't get the tax credits. And then also what kills a lot of people with the married filing separate is, let's just say you had to get Obamacare, or you got your insurance through healthcare.gov. If you're doing married filing separate, you don't get that premium tax credit. So now you end up owing money at the end of the year because you're not able to get that premium tax credit.
Wow.
So that's why I always tell people, be careful when it comes to not like doing that married filing separate, or, trying to stay away from, because sometimes it's more beneficial for y'all to just do it together and just do your form, opposed to doing things separate.
Oh, that makes good sense. Okay, so that was an excellent explanation of what's going on with that, and walking through those examples of those dollar amounts. Appreciate that. Now, question 7 speaks to the hobby versus business rule. Mm-hmm. How long can a business lose money before the IRS says it's a hobby?
3 out of 5 years. So if you claiming that you had losses 3 out of 5 years, then they can say that your business is a hobby, and then they can say that you no longer can claim your business anymore because it's not making any money and you showing no intent to get no profit. So At least, so you never want to show. So what I always tell people is not saying that you're not making, like, let's just say, just to give an example, let's just say in your business you put down that you made, like, say your gross was, say, I'm just going to give a low ball. Let's just say your gross was like $1,000, right? And then you had expenses that was $1,500, which is over the $1,000. Now you in a negative, right, in your business. But let's just say you had a job, so you still had income. However, you had a negative in your business, and let's just say that happened 3 years in a row. That fourth year, now they're like, okay, this is not a business. This is a hobby because you're not making no money on this. Now, let's just say that $1,000 now you turn around and you made $100, even though you still had the write-offs. Your gross was 1,000, but now you made at least as a profit of at least $100. Now they're not coming after you because you have something showing in a positive and it's not showing a loss. So the thing is you don't want to be taking losses in your business 3 out of 5 years. But if you keep taking losses, that's when they can say it's a hobby.
Okay, got it. But they need to be 3 consecutive year of losses.
3 consecutive years, yes.
Okay, gotcha. Okay, 2026 gonna be a good comeback for me. Okay, so question number 8: tax extensions explained, honey, because I know that tax extension, they can come in to help you. And so, what about tax exemptions do we need to know? I see you got some deadline dates, so help us out with that.
Yeah, so for taxes, business taxes are always due before personal taxes. But I always recommend, if you do have a business, try to do them together, especially if you're an S corporation, because your business floats into your personal. So it's just best to kind of get it done at the same time instead of trying to figure things out. But businesses are due March the 15th of every year, and personal taxes are due April 15th of every year. Now, if you file an extension for your business taxes, if your business taxes you file an extension for, you have until September 15th to file those taxes. If you file an extension on your personal taxes, you actually have until October the 15th to get your taxes filed. So businesses is, again, always due March 15th, and personal taxes are due on April the 15th. Now, this is the key to that, because a lot of people file extensions a lot of times when they try not to, especially people who know they're not going to get no money back. Those people normally be like, I'm filing an extension, I ain't getting nothing back really, so I'm not stressing it. So if you're that type of person and you know you're going to owe, the key is that when taxes are due on that April 15th or that March 15th, depending on which you're a business or personal, if you owe money, the money that you owe is technically due at that date of the deadline for taxes. So if your personal taxes is due April 15th, and you owe, say, $500, that $500 is supposed to be paid by April the 15th, or you need to be setting up payment arrangements, even if you haven't filed your taxes, because that is the deadline. So what happens with a lot of people is they'll owe money that for their taxes, and they filed extensions, and then because they owe and they think, oh, I filed an extension, so I'm good. However, they'll end up getting a bill, and on their bill from the IRS, now they got tax, they have a tax penalty, and they have interest added on to it because they're charging them extra interest on it because it was not taken care of by the deadline. Because on the taxes, when you file an extension, they ask you on there, do you have a payment that is owed? And if you're saying no, then you're good and you don't have to worry about it. But if you're saying you know you're going to owe, then technically that is due by the deadline, which would be that April 15th. And the same thing for business is March the 15th. So even if you file an extension, those payments that are due are always due on the deadline date, not the extension date. So please, everybody make sure that you remember that those dates are always due on the date that the deadline is, not the date that you filed your extension for.
Oh my goodness, this is good stuff, girl. This is good stuff. And the owing of the taxes and the payment plans. Now that's bringing us to question number 9. Owing taxes and a payment plan. What's the best option if somebody owes? And I know this can be a lifesaver, and this also can kind of be one of them scare tactics, because when you get to owing and you know you got a balance and you get them letters talking about a lien on your property, then it'd be like, dang. But my experience is get down to that tax office before and get an understanding. But help us out with this and how this comes into play when you owe the taxes and being able to speak up for yourself. And sometimes you may need a payment plan.
Now, with owing money on your taxes, if you are somebody who's going to owe money when it comes to your taxes, make sure, number one, that all your tax returns are up to date. And the reason why I always tell people that is because, y'all listen closely, you may be able to get a one-time abatement. Y'all heard it from me. Y'all heard it, right? Y'all heard it. You can get a one-time abatement. So if, let's just say, for instance, you're somebody who have not done your taxes and say it's been 5 years and you ain't did no taxes in 5 years. And you like, oh my God, I ain't did taxes in this long and I owe all this money. Depending on how much money you owe and what you have going on your account, if your taxes are all caught up to date and you have filed them all, and once they put it all in, and let's just say now they'd be like, oh, you owe $20,000 or something like that, and it's because of the penalties, the non-filing fees, because you get a non-filing fee, you get a penalty, and you get interest added. So those are 3 fees that you're going to have now added on to not getting your taxes done. Once all of those is up to date, all your taxes has been, filed and everything is up to date, now they give you that amount and they saying, okay, now you owe $20,000. What you can do is contact the IRS. You can call them yourself. You don't even need anybody to help you with this. And you can say, okay, I have caught my taxes up. I filed all my taxes. I want to know if there's, and this is only if you have not done this before, then you can say, can I get a one-time abatement? So then the IRS can give you a one-time abatement that can give you a credit. So now you may end up, like, say it was 20,000, you might end up not having to pay but half of that. Or, or if there was a hardship, they may be able to take some of those penalties and interest and things off of your account and help you out with that. Not only that, you can also go ahead and get a payment plan as well on the balances that is owed. And then you can get a payment plan that will fit your budget. You don't have to spend a slew of money every single month because they know that people can't afford to pay a whole lot. However, just be careful, because when it comes to them, you want to make sure you make them payments and you don't want that stuff to go in default. Because one thing the IRS can do, if you are somebody who want to travel, they can take that daggone passport away from you and you will have it revoked and you won't be able to go out the country at all because they will take away your passport. Not only that, they can levy your bank accounts and they also can take away your property. So though the IRS is people who you do not want to play with when it comes to owing money. You want to make sure that you get in those payments paid, them plans set up, and making sure you're taking care of your taxes. I tell everybody all the time, do not ever not do your taxes. Even if you know you're going to owe, just set up something. Even if you want to say, hey, I only got $50 a month, pay $50 a month. Like, just do a small payment. They will accept it because they want you to pay and they know they want their money. So just do what you can afford, but don't ever just not do them, because when you not do them, you're hurting yourself and you're putting more money on what you're going to possibly owe.
Amen and amen.
Now, the other thing I'm going to say is about people who go exempt. There are so many people who go exempt with their jobs and they be like, I'm not paying no taxes. And they be like, I'm not going to pay 6 months out the year, or I'll go exempt for so many months and then put it back on. Now, sometimes that can work for you if you go exempt for a couple of months, because I know some people will do that, where they'll be like, I'm going to go exempt on paying taxes for the first 6 months. And then the last 6 months, I'm going to have the taxes put back on there to pay what I'm supposed to pay. Sometimes that can work only if you have children that's under 17. Sometimes that will work because you'll get that child tax credit. Oh. If you're not getting that child tax credit and you don't have no kids that's under 17, a lot of times that may not work in your favor for you. So then you'll mess around and end up owing a whole slew of money. And what I tell people is I don't want to say the word retarded, but it's crazy to do, because you're saying to the IRS, you're telling yourself, I don't want to pay taxes out of my paycheck. But then now you're going to have to get a payment plan. Guess what? You're paying anyway. You're just paying it a different way. So even though they're not taking out your check, but guess what? You still got to pay them. So either way, you're paying them. So why? And then now, if you make a payment plan, and I want all of y'all to do this just to kind of so y'all can see, when you make payment plans for the IRS, if you pay it off, they have like the 1 month, they have the 3 month, and then they have the month to month. When you go month to month with paying the IRS, those fees you pretty much are doubling the amount that you owe. So when you're doing that, it hurts you so much more than it would be for you to just let the taxes come out of your check. So that's why I tell people, do not do that exempt stuff. Like I said, you can play with it a little bit when you have kids that's little and you know you're going to get that child tax credit that can help you. But if you don't have that and you making a certain amount of income, and I went over the amounts when I'm talking about income, because that earned income credit, some of y'all may not always get that child tax credit depending on your income, because a lot of times it also goes off of income as well. And so sometimes some people be in the ballpark thinking, oh, I'm just going to get this. Like I've actually seen somebody's tax where they actually wind up only getting like $20 because of how it's adjusted for the child tax credit, but they end up getting like $3,525 or $3,500 in earned income credit, opposed to getting a little bit of money in the child tax credit, because again, it goes off of the income. So that's why I say be very careful when you're doing that exempt stuff, because it can truly hurt you. And again, you don't want to play with the IRS. You don't want them, because they can garnish your wages. If you're working for someone, they can garnish the wages from you. They can take away your passport. They can take away your home, and they also seize your bank account. So you could be going to your bank account one day to go get some money out, and you can't even get in it no more because they didn't so close it out and take your money. So you got to be real careful when you're doing things like that. Like I say, don't play with the IRS when it comes to that.
Well, I think that is, thank you, babe. I think that is such a powerful lesson, and getting a clear understanding, because like I said, I'm a witness to that. When I ended up selling my home in California and ended up and then had the money before my pre-retirement age. So that all kind of clashed together, and that had us in a position where we owed. And the first person, they had spread it out for us, but then still we had a chunk of money that we owed. And my husband thought he was paying it off right the way he was doing it, but it wasn't coming in like it was a complete statement. Girl, they sent me a thing talking about leaning on my new house. I said, the devil is a lie. So we paid it. What is going on? And they kicked us out the program. But when we went there, we made an appointment online. We went in, we talked to a young man. He explained everything. And like you mentioned, that abatement, we didn't, some kind of way, we didn't get it all wiped out, but they wiped out a little minuscule amount for us. And I was glad. A portion. And then they put us back in the program. And we got a minimum amount that we pay right now for a full year. And then next year, that amount almost doubles. And our goal is to get it paid off. But don't just freeze. That's what I was telling you. I think when people start getting them letters and they see the amounts, they get afraid. But don't be in fear. Contact them. They will work with you.
Set up an arrangement. Just make sure, like I said, just make sure that you have the taxes up to date, because that's the main thing, is making sure them taxes is up to date. Because if your taxes is not up to date, they're not even going to set up an arrangement for you or even set up a payment plan for you, because your taxes are not up to date.
Exactly. So, and we definitely did that. Kept the taxes going, but we went in there and got information. And then working with you last year, that gave even more clarity. So I'm just excited about it. But do not freeze. Don't stick your head in the sand. Ask for assistance.
Right.
Because if you don't, that's what freaked me out. I was like, ain't nobody taking my house. No, no. So we went and talked it out. Yes, yes. Okay, that was good. Okay, question number 10. Okay, let me keep it moving. Question number 10, LLCs to S-Corps. When should someone switch a LLC to an S-Corp?
Now, me personally, I always tell my clients, once you hit $40,000 in your business as an LLC, it's best to go ahead and switch your business over to an S corporation. And the reason why I say that is because you end up paying less taxes. With the LLC, what a lot of people don't realize is that a LLC, you're doing your taxes on your personal tax return. All you're doing is a Schedule C on your personal taxes. And then you're paying a self-employment tax. So now you're paying 3 times the tax. Because you ever look at your W-2s, you know how you look at the one side that says your employer pays this amount, you pay this amount. Now that's the same thing that happens. You're going to pay an amount, and as the business owner, you're paying the employer amount. And then guess what? You're now paying a self-employment amount. So now you got that 3 that you pay. So now you're paying more money opposed to you paying less money. So now you can take away that self-employment tax when you're S-Corp. You don't have to pay that. However, it is a catch to it because with an S-Corp, you are required to do a payroll for yourself. But it's a good thing to do a payroll for yourself. And when you're making at least $40,000 a year, it's good for you to still do that, especially if you're working for yourself. Because and if you don't have no job either, because the reason why I say that is because you're now still continuously paying into Social Security and Medicaid. And you know how a lot of times when people go out and work on their own, you just working and making money, but you forget about Social Security and Medicaid. And when you get to Social Security age, and when you hit 67 and you're able to get that Social Security, if you ain't put no money in it and you working for yourself all those years, you ain't got nothing in there really to get. So that's why you'll see a lot of older people who you may see still working because of the fact that they don't really have enough money to help them survive because they didn't have that much money in the Social Security. So that's why I say you want to still continue to pay into that Social Security and Medicaid as a business owner. You don't want it to keep showing zero because when you get time to get ready to get that Social Security, you want to be able to still get your money. So make sure as a business owner, you're still doing that for yourself so you're not getting short on the fact that you don't have, that going into that pot. And then not only that is helping you too, because now you're paying yourself. So you're getting yourself a W-2 at the end of the year and you paying taxes. So you know how before we was talking about those write-offs, now you ain't got to write your whole life away on your expenses because now you actually pay some taxes. So that's saving you on having to write off so many expenses that you don't need to write off.
Wow. Okay. Okay. Now that's good information.
Mm-hmm.
All right. Now, question 11 states before you file, what's one thing people should know before filing?
Now, I talked about this a little bit earlier
Yeah.
about the making sure that you have all your tax forms. Tax forms that are income forms. The reason why is because a lot of, like I tell everybody, like I said earlier, all companies have until January 31st to give you your tax form.
Mm-hmm.
So if they have until January 31st to give you your tax form, that means you may not have all your documents before January 31st. You know what I mean? So if they have until January 31st to give them to you, then you probably want to wait until after then before you file to make sure you have everything. Now, remember, I did say some companies, especially if you're working for different companies, there may be some companies that you don't even realize that are all electronic. So you might have to go on their websites to get. Like some people may have a health savings account with their job. Some people may have 401k and some like depend on stocks that you may have. Like you might have got a company where you may have some stocks and things that you might have paid out of or whatever inside your company. You might have some dividends or different things that you could possibly have. Those type of things you want to make sure that you go to those websites that the company has for you to go to be able to make sure that those forms was sent out to you, or if they wasn't sent out, that you can just go on the website and get the form yourself so you don't forget or miss out on that. Because what happens, and I see this happen with people multiple times, and I tell people myself this, I say, wait, and then people still be like, I need my money like yesterday. I need my money now. And I'm like, okay. And so, of course, I'm not going to keep fighting with people about when they want to get their taxes done. So I'll do it. And then a couple months later, they'll get a letter saying that they owe because of a tax form that they did not receive.
Because
Now,
it
I want
wasn't
to
finished.
listen to this list of tax forms that are income documents. W-2s.
Yep.
1099 NEC. Those is what business owners are normally going to receive. You're also got your 1099 MISC. You have a 1099 INT. Sometimes you'll get that from your banks. You have a DIV. You have a 1099 DIV. You also have a 1099R. Those people who are retirement, those when you would get that R. There's also, for a lot of y'all business owners, there's a 1099K. So if you're somebody who sell on, say, Etsy or Venmo, or if you have the Square or PayPal and all those type of things, eBay, if you're selling things on these things, and because they done got hit, the people talking about they just got Cash App and they trying to do Cash App and go in here and then send money to people's accounts. These people, the IRS, they got hip to that, so now they're going in and making sure that they actually are creating off of the information that's going into these Cash Apps and those PayPals and the Squares and Venmo and all that kind of stuff, and they're actually making the 1099K and having those sent out to you.
Because so what on the 1099 are, Niecy, for that, for the retired people such as myself?
Yeah, that's the retirement.
One of them.
Yeah, retirement, you would get the 1099R, but the 1099K is for those business, like when you're receiving payments through like Square, PayPal, and all that kind of stuff. Those, even if you have Cash App, like even them, they're sending out a 1099K. Another company who's sending out those now is also people who working for like the Ubers and Lyfts and things like that. They're sending out those 1099. So you have to be very careful in making sure that you're receiving these documents. A K1, if you are someone who is a business owner and say you have an S corporation or a C, sometimes you will receive a K1 if the other person already filed their taxes and they had you on there as a partnership, and you have a part, like you do a 1065 or something like that, then they will give you a K1 so you can file your portion. Because let's just say your company made, say, $100,000. So when they split it up, 50,000 goes to your partner, 50,000 goes to you. So you're going to get a K1 for that 50,000, and your partner will have a K1 for the $50,000. So that's what the K1s are when you have those partnerships. So those are forms that you want to make sure, like I said, when it comes to income, check with your company. Make sure you don't have no stocks. Make sure if you did anything with your 401k that you got a loan on it, or you got borrowed any money on it or anything like that. Make sure that you go ahead and check all of that stuff, because all of those things need to be given when it comes time to get your taxes done, because I don't want to see y'all doing your taxes, getting money back, balling out, throwing up deuces like you partying like a rock star, and then 2 months later you like, oh my God, I owe $2,000. So I'm trying to tell y'all,
they coming for that cash. They coming
right there. And they going, and then the bad thing about it that I hate is that not only are they going to come back at you for that money, but then they going to tack on penalties and interest on top of it. So look, y'all, I'm telling y'all got to stop playing with them, because they will hit you and hit you hard.
They are professionals at this. My God. Okay, so we're coming to the end here. We're getting down to question 12. Y'all stick around. Hang on. We're almost done. We got some good information for you at the end. But this next question 12 is talking about health insurance forms. Speak to us about that 1095A. And so what about Obamacare forms?
Right. So the 1095A, some people because some people say Obamacare, some people say healthcare.gov. Just because you may not think it's Obamacare, because some people get confused with it. They be like, I didn't have Obamacare. And I get that a lot when I'm doing taxes. They be like, I didn't have Obamacare, because they went on, these different companies are calling people now. All these different insurance companies are calling people and asking them about insurance. When these insurance companies are calling you, a lot of time what they're doing is they're setting you up on healthcare.gov. Healthcare.gov, ding, ding, is Obamacare. It's just that,
and is it the same name? Niecy, is it the same name? The Affordable Care Act.
Affordable Care, and that's
what I was hearing. People was confused.
The word Obamacare, they get
Obamacare is Affordable Care Act,
right? So that's why I tell everybody, y'all listen, is that when it comes to those health insurance, you're going to get that 1095A for your health insurance, and you may not think it's Obamacare. It's through healthcare.gov, but that 1095A is required to file your taxes. So if you don't have that form, when it comes time for you to file your taxes, the IRS will not even allow your taxes to go through. It will reject your taxes, saying that it's missing that form. So make sure that if you had insurance through the healthcare.gov, make sure that you have that form. Another thing I want to warn everyone about is, when you give that information, let's just say you called or you talked to somebody on the phone for insurance, and they said, and you gave them whatever figure that your income was going to be for that year. If the end of the year comes and your income, say, went up from what you told them when you submitted their insurance, you could possibly end up owing money later, because your tax credit that they're giving you, their premium tax credit for that insurance, goes off of the amount that you told them when you got that insurance. So if your income goes up and you don't notify them that your income went up or anything like that, then you can possibly end up owing, because that premium tax credit that you're getting for that insurance is off of the amount that you gave. Now, if you have a form 1095B or a 1095C, the B is if you got insurance on your own, it was something, through a company by itself, it wasn't through healthcare.gov. 1095C is if you got it through your job, through your employer. Those two forms are not required at tax time. The only form that is required is that 1095A. And again, you will not be able to submit taxes without that form.
Wow. Okay. All right. So now it wraps up our last question was with that health insurance one. But right now, we just want to share with you guys, because you talked about all of that, that protecting the income. All right. So those were covered. And so I just want to leave you guys with this. I know this was a lot of information tonight, right? But it's necessary information, because what we were discussing was getting people aware and that what's going on, because a lot of us, we don't know what we don't even know. And I know when I jumped into my entrepreneurial journey at 57 years young, I'm 62 now, I did not know it all, but I'm blessed to have a good business partner and an accountant right now. Okay. And Denise Murray. So Niecy, what was your purpose on getting us this information? What was the goal for today to do this?
Well, today I just really wanted, because I know it is going into tax season. January, like I said, the IRS will be opening up taxes on January 27th for people to start filing their taxes. So I just wanted people to be aware of the things that, number one, if you're a business owner, things you can write off. Even if you're not a business owner, things that you can write off, things that you need to remember and be reminded of when it comes to doing your taxes, so you don't fall short of it when it comes time to do your taxes. And not only that, show you and give you some information that you can have for the future, because now that we are in January, I want people to understand, like I was talking about that business, about the 40K, and about having the payroll and different things like that, and having your account going from an LLC to an S-Corp, and how you can save on taxes and things. Now we're at the beginning of the year, so I want people to understand these things, so now you can get these things in place so you're ready for the following year. And so you're not being overcharged, and then you actually being able to know how to set yourself up for the year, because it is the beginning of the year.
All right. And hey, guys, if you found this information valuable, then what we want you to do is to share the live, save it, and drop your questions in the comments. And by all means, honey, y'all need to follow Talk It Out with D&D every Thursday. We're coming in. We're at 4 p.m. Pacific, 7 p.m. Eastern, and that make it 6 in the Central. So come back, follow us each week. A lot of times we have regular topics. We're on top of hot topics, honey, and just real life issues, because we keep it real and raw. But then days like this, honey, we bring in the business, okay? So we're loving that. So now, last but not least, I want you to tell them, Niecy, how they can find you. If you guys need tax help, you need business help, Niecy's gonna tell you. She my sister, so I can call her Niecy. Niecy's gonna tell you how you guys can contact her. I'm telling you, it was the best decision I ever made to come off TurboTax and give me a real accountant, okay? So share with the people, Niecy. Tell them how we can contact you and get some assistance, because time is coming up, honey. It's now.
Right. So if you're wanting to find me on Instagram, most of the social media platforms is going to be at UBELLC _, and that's U as in umbrella, B as in ball, E as in Edward, LLC _. You also can go to my website, which is ubellc.net. And you also can reach me on my personal page, which is Niecy Murray. I got hacked, so I can't say my full name, Denise Murray, on there. So if you see it, it's going to say Niecy Murray on Facebook and things. But everything else, you'll see me at UBELLC _ or just UBELLC. So everything is pretty much UBELLC. That's the business name. And yes. This one more plug before we go. I just want to plug y'all that on February 21st, there will be the Business Oscars. So if you are somebody who is a business owner and you want to promote your business, you want to be on the spotlight and advertise your business, you want to market your business, you want to get networking with other entrepreneurs, you want to be in the face of other entrepreneurs and getting some good networking in, or if you know somebody who you want to nominate to become be in the spotlight and different things from their business, make sure you get your tickets. If you look at the bottom of the screen on here, you'll see that it says get your tickets for the business Oscars, and it's going to be at inbox.ubellc.net/business-Oscars. Go ahead, screenshot that, and go ahead to that website. And even if you don't put the business Oscars on there, it still is going to get you to it. So it's just inbox.ubellc.net, and go to that website and get your tickets today. Become a sponsor if you want to market even more, because I will be marketing your business. I will be having you on a stage, and guess what? You will be getting show off in front of people. So make sure you get your tickets and get your sponsorships if you're ready. If you have materials for your business, we'll have little snatch bags that we can be putting your materials in for people to get things that you may have. If you have ebooks, whatever you may have, if you want to get your materials out and get it in front of other people to support your business, this is the event that you want to be in. And not only that, we're giving you love. We're letting you know, like, we're celebrating you as a small business owner, because we don't get celebrated a lot. It's always the big businesses. And then you always see people who have big businesses or who are on the top of the line. They're not really looking at the little people. And so I want y'all to all know that even as a small business owner, you are a flower, you are blossoming. And I want to say congratulations to you and your business. And so that is why I want to celebrate you in your business. And so that is what this event is about: celebration of small business owners, letting you know that, yes, we appreciate you. Not only do we appreciate you, but I am very enthusiastic about the fact that you did not quit and you kept it going,
Yes.
stop, and you kept moving. And because of that, you deserve to have something for that. So just for that, I want to be able to give you your flowers. And so that is what this event is all about: making sure we showing love to the people who are the small business owners. So make sure it's going to be a red carpet event. So you want to be fly, because you're going to be there. We got the DJ, we got the music, we got the drinks, we're going to have it all turned up. So yes, it's going to be a fun time as well. But I just want y'all to make sure that you're there and that you get your tickets.
Absolutely. That is wonderful. I'm so excited about it, honey, because I'm flying out from Vegas to Atlanta, and Tanya, I'm coming. And so I'm excited about it. And just for next week, we will let y'all know, honey, we're gonna be working on vision boards. So
Mhm.
that's our topic for next week. And it's gonna be done a little differently, because we're gonna show you how to put your vision board on your phone.
Yes.
Okay? How you can do it on your phone, because you need to see it and act on it every day. All right. So we just want you guys to know we appreciate you. Niecy said that so eloquently, honey, because iron sharpens iron around here. Proverbs 27 and 17. And so y'all be blessed, and we will see you guys next week on Talk It Out with D&D. Okay?
Bye bye.
Share, share, share.